All right, looks like the live stream show software is working. Oops, let me change the settings here because I forgot to turn on monetization because everything is turned off. So I can earn my $3 for the video. Okay, turn on the live chat, check settings, okay. I think we're good now. Looks like we are good. Turned everything back on because I have to do it manually because YouTube turns everything off as default settings. Okay, so tonight's show, I actually found about 18 hours ago after the live stream show last night, I found a really good article for a case study for how foreign central banks help prop up the US dollar in the dollar tug of war. So they're on the demand side for dollar demand, and it's not just dollar denominated debt. So you can see there on your screen, this article is from, because I get all these questions about the dollar tug of war, explain more things about it. And on the weakened dollar side, you have the US government, the US Treasury, the Federal Reserve. You have a lot of people in power here in the Washington, D.C. and Wall Street area who want a weaker dollar. However, the global financial system, the global economy, foreign central banks, you have over at least 66 countries that run dollar pegs that need to hold massive amounts of US dollars in reserves. You also have other countries like the Reserve Bank of India, that is their central bank, which want a certain type of exchange rate for their currency, the Indian rupee, against the US dollar. And so they have a central banking policy, monetary policy of intervention and also buying dollars. So this article came out on Tuesday, November 3rd by Aftab Ahmed and Swati Bhatt, an exclusive from Reuters. India's central bank, or the Reserve Bank of India, exploring investment options for reserves, officials say. The Reserve Bank of India is looking at diversifying its foreign exchange reserve investments amid the fall in global interest rates caused by the pandemic. Also manipulation because governments aren't cutting back on spending. So you have all these central banks trying to create massive amounts of currency and credit. So big government in all these countries does not have to cut back because God forbid if a government bureaucrat making $75,000, $80,000, $90,000, $100,000 a year or more has to take a little pay cut, or they have to fire some people. The private sector is doing massive amounts of this, according to two government sources aware of the development. So the Indian Central Bank, Reserve Bank of India, is looking to make additional investments now in other things than normal. The Reserve Bank of India's foreign exchange reserves stand at a record $560.63 billion, which means in trades in terms of exports from Indian goods and services, probably a lot of pharmaceuticals, a lot of big pharmaceuticals or generics, which they manufacture a lot of, also a lot of other online services. They do a lot of telemarketing, telework. And they're doing really well with trade with the US and Europe. So they have an enormous amount of foreign exchange reserves, 560.63 billion. The central bank, which mostly invests in physical gold, although they've been doing a lot of paper games with gold, trying to get a lot of retail Indian physical demand into these exchange traded gold trusts, which is the shenanigans that goes on here in the US with GLD. They've been trying that as well. Invest in gold, sovereign debt, and other risk-free. There's no such thing as risk-free anymore. There's only return-free risk, as Rick Roll and others have said. James Grant of Grant's Interest Rate Observer, and Rick Roll. There's only return-free risk at this point with a lot of government bonds. Deposits has seen returns fall as monetary policy loosened globally because all the governments don't want to cut back on government spending. So it's stagflate, tax lie for all these governments at different degrees. U.S. two-year government bonds ended at 0.16%. As a result, the Reserve Bank of India is likely to increase its gold investments. We'll see if they actually buy physical gold or if they're going to buy gold ETFs, as well as buying dollars and exploring. So they're buying dollars. So that's something to take account for. This is part of the dollar tug of war. These foreign central banks, and this is why I wanted to use this as a case study for the dollar tug of war. You have an example here with this exclusive Reuters story of a foreign central bank accumulating dollars. So why would they accumulate dollars? Because they need something to devalue their own currency against. Maybe they'll devalue against gold. They should be buying gold, but we'll see. As well, buying and global trade would be, if there was gold settlement in the past, global trade functioned a lot better with gold settlement. That's just my opinion. So the system we have now is perverse. You have Triffin's dilemma. You have the dollar tug of war, where the people at the U.S. Treasury, the Fed, want a weaker dollar, and they want to devalue the dollar pretty quickly, and it's not happening. You have the dollar index, which was rallying earlier this week. It got up above 94, so all the dollar bulls were like, this is it. This is the big rally. It's coming. And then the dollar is getting weak again now based on all the messed up shenanigans going on in Congress, the House with the elections, and the presidency. And it is a total mess. I'm not going to talk about that in this show. It is a absolute, complete, and total shit show of a disaster. You have both sides now probably that are going to be contesting things. That's how bad things are. And the pollsters totally ruined. The pollsters, except for the Trafalgar group, the pollsters should all be fired. All these pollsters, these mainstream pollsters, they all need to be out on their ass. They don't deserve a job. And that's how bad they are. Okay, so as a result, the Reserve Bank of India is likely to increase its gold investments, so we'll see if they buy physical gold, as well as buying dollars, US dollars, and exploring investing in AAA-rated corporate bonds. That's probably not a good idea to buying AAA-rated corporate bonds because of the shenanigans that go on with the ratings agencies here in the US that drastically overrate these AAA-rated corporate bonds. They're not really AAA, a lot of them, especially with the cash flow problem we have right now in the real economy. So many companies, said the sources who leaked this information to the article, who declined to be named due to the sensitivity of the issue. Wow. So there's good information in here. Quote, so you're getting a legit information and a good case study about how central banks manage their exchange rates, how they accumulate dollars, how there's artificial demand for dollars from foreign central banks, from other countries that run dollar pegs. They have massive amounts of dollar reserves. So this is what helps cause the dollar tug of war and why it's stuck. And why the people at the U.S. Treasury and President Trump, who was tweeting it out, and we'll see what happens with the election, but for the last 18 months, 24 months, President Trump was tweeting a lot about wanting a weaker dollar. And this is one of the main reasons why they could not get a weaker dollar, because you have all these other currencies and the global economy is on a dollar standard. They all want a weaker currency versus the dollar to help with exports. So like the Indian economy, the Reserve Bank of India can have massive foreign exchange reserves, 560.63 billion. That is a massive amount of capital to invest. Quote, here's a quote from one of the officials that's anonymous that leaked the information to Reuters. Quote, the Reserve Bank of India is likely to continue to buy massive amounts of US dollars. The problem is the dollar deployment and getting good returns on the dollars, investing them properly. I think this is getting good returns on your investments are a problem for everyone. And I don't think there's enough. The gold stocks, the gold mining stocks, and the royalty and streaming companies are not big enough probably for some of these central banks to buy. Although maybe we're going to start to see more value investors and more central banks, because now like the Swiss National Bank, which now has a stock hedge fund, maybe they're going to be buying even more gold stocks, because over the last 3 or 4 years after the Swiss National Bank created hundreds of billions of dollars out of thin air running that Euro peg for 3 years and then ended it, they started accumulating, besides technology stocks. Supposedly they're giving the profits to taxpayers. They then went for a certain period of time and bought gold stocks on the dip. I haven't seen if the Swiss National Bank, though, is buying a lot of gold stocks, but it would not surprise me. So we'll see if they buy the gold stocks, the gold mining stocks for the dividends. That would actually be smart for the Reserve Bank of India to do even more than Warren Buffett and accumulate like Newmont Mining and some of the other good gold mining stocks on the dips and just build large positions. It'd be a good hedge against their dollars. Quote, the Reserve Bank of India likely to continue to buy dollars. Problem is dollar deployment getting good returns. Okay, I already repeated that. The official added that the Reserve Bank of India was studying the possibility of investing in AAA-rated corporate dollar bonds, probably not a good idea in my opinion, which offer better returns than sovereign credit, which is government bonds, which all these governments and their central banks, they can't pay interest on the debt because the debt's growing out of control, and these governments don't want to cut back. These governments, especially the governments that are going to start doing MMT, QE, mostly the U.S., we'll see which other governments decide to try to do this. The amount of government control over the economy is going to explode. According to the crooked GDP numbers, the amount of government control over the economy is now over 40% of GDP here in the US. So before the pandemic, it was like 25, 30%. It was in that range. Now we're over 40. and it's growing quickly, especially if MMT, QE, Green New Deal, universal basic income, the size of government grows, more government central planning, more government infrastructure spending, more Green New Deal. If Biden actually wins, I think there's going to be a lot of lawsuits. It's going to be a freaking mess. But the size of government is not getting smaller, especially here in the U.S. Such investments have not been made in the past, so the central bank would move carefully. So this is even the central banks are having problems now. I guess they don't want to buy any more U.S. Treasuries, or maybe they're going to cut back on the amount. They're getting worried about the percentage of U.S. Treasuries because U.S. Treasuries are not paying income, which is everything is so distorted now. People are buying stocks for capital gains. People are buying stocks for income and bonds for capital gains. That's over 100 years of finance, of conventional finance that has been distorted. So normally people buy stocks for capital gains and bonds for safer income, and now the exact opposite is happening because of government and central bank distortions of the economy, the Cantillon effect. Foreign investors have continued to pour money into the Indian stock market because of the stronger returns. Foreign direct investment flows, particularly towards Reliance Industries, have pulled in dollars into the country. Traders say the Reserve Bank of India has been intervening heavily in the spot market for their currency foreign exchange rate to prevent appreciation of the Indian rupee, in turn adding to its reserves. So they're trying to keep the currency weak. They're accumulating massive amounts of reserves or dollars through global trade, and then they're using those dollars to try to keep the currency weaker relative to the dollar against the dollar. So this is how a central bank, a foreign central bank, has artificial demand for dollars besides the dollar peg, besides the currency peg, because they have to have a lot of reserves to run the peg. So you have like the Hong Kong dollar peg, and they have hundreds of billions of dollars worth of reserves, and those are all dollars to run their dollar peg. A source said the dollar buying intervention will continue as both the Reserve Bank of India and the government are comfortable with a 73 to 75 exchange rate per US dollar range on the local currency, the Indian rupee. Despite a contraction in gross domestic product expected in the current fiscal year to March 2021, foreign flows have remained healthy. Foreign investors bought shares worth 2.52 billion Indian shares, bought in Indian stock market shares worth 2.52 billion in October, so there's net capital inflows, taking total investment in 2020 to 6.47 billion, though FLLS are net sellers of bonds worth 13.8 billion, 13.98 billion in 2020 so far. They bought a net 459 million in October. The rupee has fallen for 3 straight months in October. So it sounds like one of the main reasons the Indian rupee has been falling 3 straight months while India's economy continues to do really well in trade and have net foreign exchange reserves, trade surpluses, is because of management of the currency, management of the exchange rate. And this is one of the main ways that the dollar tug of war works. This is one of the main reasons on the dollar tug of war is you have not only dollar denominated debt, the total amount of dollar denominated debt from foreign companies, foreign banks outstanding, and that creates demand for dollars, but you also have all this artificial demand that helps prop up the dollar by these foreign central banks that want a weaker currency, a weaker exchange rate versus the dollar. So for those of you who are more interested in this, you can read Jim Rickards' Currency Wars that he wrote, I think, in 2010 or 2011. It's a really good book. It explains a lot of this. That's where I learned a lot of this from, but also reading articles like this, and this is like the perfect case study to learn about how the one side of the dollar tug of war, an important part of the dollar tug of war, actually works. Okay, thank you for the $5 super chat from Justin March. It is much appreciated. It's probably $5 more than I'm going to make from Google AdWords revenues on this video, so it's much appreciated you chipping in there, considering what's happened to my Google AdWords revenues, despite me getting a lot of views on each video. And he is also a Patreon account contributor, one of over 1,000 people a month sticking with me, where I write a lot of articles, normally at least one per week, on a lot of different global macro topics, gold mining stocks, silver mining stocks, precious metal royalty and streaming companies, oil articles. There was a new Sandstorm Gold update in the last 24 hours if you want to read that, because there's been a lot of questions lately about that, why the stock's falling, and talking about the valuation. It is at a very steep discount relative to the current gold price and relative to other top gold stocks. So it is very cheap. compared to a lot of other gold stocks. And I think we'll see probably a new deal. They almost had the largest deal in company history done in the last 6 weeks. I think we'll probably see another large deal in the next 6 months. And if they don't do another large deal, they're going to have over 100 million in cash on the balance sheet, plus all this other ammo to go and do a deal, a very large deal. Hopefully it's for immediate cash flow, because that causes a re-rating on the valuation multiples for the stock. Okay, that's it for free for updates on Sandstorm Gold. There's a lot more in the article behind the paywall. Thank you very much for listening. If you want to read more about how a central bank helps prop up the dollar in the dollar tug of war, although if they invest their reserves into gold, they are hedging, then I will attach the article link, which is a Reuters exclusive. It was information leaked by a Reserve Bank of India employee who did not want to go on the record, but leaked the information to a Reuters reporter nonetheless. The article will be below the video in the information and description section. And this is why, despite all the craziness here from the Federal Reserve, all the off-balance sheet shenanigans with the special purpose vehicle, and how the U.S. Treasury and the Fed want a weaker dollar, this is one of the major reasons why they can't get it and why the dollar is stuck, at least for now, in a dollar tug of war. I do not know how much longer this lasts, but it's going to last for at least a little bit longer. Tough to say exactly how much longer it will last, but the dollar is going to be in a tug. It's been in a tug of war, for about 5 years now. And that scenario that Brent Johnson is describing, where the dollar index goes to 104 or higher, is very highly unlikely, as the people at the U.S. Treasury, at the Federal Reserve, and in Congress now are very well aware of this, as they've been talking. My friend Lynn Alden and I have been discussing this. She said it publicly. We've discussed this in emails, that the Federal Reserve minutes for the last 5 or 6 months, they've been discussing this. They will not let the dollar rally that much. They will change the rules. They will move the goalposts. They will play the games. They have all these dollar swap lines, currency swap lines for US dollars available for a lot of different countries, not just the G7 countries. And then they also have a global repo facility for countries that just want to pledge their treasuries as collateral to get more dollars. So there's a lot of games that governments and central banks, especially with the world reserve currency and as powerful as the US still is, and the US is the world's largest, most powerful, and richest banana republic in world history. It is still powerful, but it is corrupt and a banana republic. And we're seeing examples of this just happen now with all the shenanigans in the current election and all the stuff, all the felonies, basically, that are being committed and that the people in power are going to get away with. Because there is no rule of law at this point. No one's going to prison. No one powerful is going to prison. Welcome to dystopia.